Hello everyone. This is the pre-market report video for today, June 2nd in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, again for the second consecutive day, Nifty was dragged by banking and financial. Kotak Mahindra Bank and ICICI Bank together alone contributed all the losses in Nifty. Here, please note, the last 2 days market volatility was nothing to do with the trend or with the Nifty fundamentals. It was mainly due to the MSCI rebalancing. Now that is over, so I'm expecting market might back to its sanity today. The problem in identifying the MSCI rebalancing prior is very complicated even for the brokerages. So if any brokerages found any, they will release those details only if they benefit from that or else they won't. But there is one thing that we can do. We can be very careful during those days and times. During the MSCI rebalancing. Just for info, the next MSCI rebalancing review date will be August 10th, 2023 and the effective date will be September 1st, 2023. For example, this time the review date was May 11th and the effective date was yesterday, June 1st. Anyway, if required, please pause the video and take the screenshot and keep it noted. This will be the next 8 MSCI rebalancing review and effective dates. Enough about MSCI, back to Nifty. Yesterday, more number of Nifty 50 stocks were advanced than the one that dropped, but the stocks which dropped were very severe. As I said earlier, Kotak Bank and ICICI Bank alone contributed more than what the Nifty whole index negative points. Thus, the index advance weekend ratio was approximately 1.3:1. And the overall market did outperform the index. The whole market advance weekend ratio was approximately 3:2, which means extra one stock advanced for every 2 stock declines. That's the reason I think last 2 days volatility is nothing to do with trend or fundamentals. About the institutional activity, finally the trade volumes were back to normal. But FII turned as net sellers. The net sold for approximately just 70 crore rupees, whereas DII turned net buyers. The net bought for near 490 crore rupees. Moving on, apart from Indian market, because of this debt ceiling removal act till 2025 was passed successfully in the US Congress, and Europe's consumer inflation comes as just 6.1% last time. Consumer inflation comes this low was in March 2022, 15-16 months ago. All these made all the major European market to close positive. Even the Japanese index and most of the Chinese index too positive. Only Shanghai Composite closed flat. And also now there is an optimism in the US that this democratic government will be able to make this new Fiscal Responsibility Act as a law before June 5th. So the global momentum was really good yesterday. In addition, last night, short covering made the energy stocks as the biggest gainer and all the oil prices jumped more than 3% ahead of the OPEC Plus meeting this weekend. Regarding number, last night Brent crude oil is trading near to $74 per barrel and WTI crude oil is trading near to $70 per barrel. For now, the expectation is that the oil producers to keep the production unchanged. In case of tech stocks, there is an upcoming Apple developer conference starting from coming Monday. There is a huge expectation and prospect of AI integration and monetization. Thus, there was a positivity around Apple stock. About Meta, they launched their slim third generation virtual reality headset. Thus, Facebook increased near 3%. All these made all the 3 US major index to close positive. At the end of the day, last night, Dow Jones up by 0.47%, S&P 500 increased by 0.99% and Nasdaq rallied 1.28%. Interestingly, VIX decreased over 12% and moved below 16, near 15.5. Again, yesterday also, it's not all positive. It's in another day because of this debt ceiling positivity, US market closed its eyes around the issues. Before the US market opening, private payroll management firm ADP released the non-farm employment data. Here, please note it's not government, it's private firm. Government is about to release their own data tonight. Anyway, the employment addition on the May month comes as 2,78,000, which is way higher than the expected 1,70,000. And the number of individuals who filed for the unemployment insurance for the first time past week comes as just 2,32,000. All these economic data are continuing to show that the US labor market is very strong, which means Fed people don't have to hesitate in the upcoming FOMC meeting for increasing the further rate hike. Here, I think either market is ignoring this rate hike issue or it is already prepared for the another 25 basis point rate hike. Again, on the contrary, ISM manufacturing PMI data comes as 46.9, which means manufacturing industry in US is contracting severely. Coming to Indian areas, despite both the banks negative in Indian market, in US, both of them traded and closed positive. In case of IT, Infosys closed more positive than Indian market, and whereas Wipro continues to be positive for the third consecutive day. So, all are very good. About SGX Nifty, at present 3 am Indian Standard Time, it closed near 18,635 mark, and at present the premium is 70 to 80 points for the spot market. Thus, it's also roughly indicating the 70 to 80 points gap up opening today. So that's what happened in the global market. Now let's move to the India specific info. First, I like to highlight the info about Reliance that yesterday S&P 500 released the Reliance credit report. They affirms the triple B plus rating with a stable outlook. Basically, it's same as before. Personally, I think being the largest market cap company in India, it has to be at least A. See, the whole India sovereign rating itself triple B stable. Only difference is it's minus. Here Reliance is positive. Anyway, it's my opinion. In addition, Interbrand, renowned global brand consultancy, released the brand value of top 100 companies in India. In that, TCS is first, Reliance second, Infosys third, HDFC fourth, and Jio fifth. So, 2 from the top 5 is from Reliance Industries. Reliance brand worth is around 65,000 crore rupees, whereas Jio's brand worth is 49,000 crore rupees. Those were the information about Reliance yesterday. Let's see how market will react to those today. In the GDR, it closed 0.7% negative, but at those time, oil price was severely down. The short covering started afterwards, so my market might see differently. Then the second info I like to highlight is about the May month auto sales data. Overall, the domestic sales was good, whereas the export was terrible. TVS Motors overall sales volume increased 9% despite over 20% drop in export. Similarly, Maruti Suzuki sales increased 9%. Eicher Motors increased by 22%, whereas overall Tata Motors sales dropped by 1.6%, but analysts were expecting the drop of over 2%. So basically, TVS Motors, Eicher Motors and Tata Motors all beats the analyst expectation. Regarding Maruti Suzuki, I did try to find the analyst estimation, but I can't able to, so I can't comment about it. Finally, about Coal India, yesterday we discussed that Indian government announced 1.5 to 3% stock offer for sale with 7% less in comparison to Wednesday closing. Because of that, on Thursday, means yesterday, the stock price dropped near 5%. But still, the offer for sale was oversubscribed by near 3.5%. Which completely I didn't expect at all, but that's the fact. As a summary, global momentum is good. Both IT and banks area are looking positive, and even SGX Nifty indicating the gap up of 70 to 80 points. Let's see. Then about the things to look out. There is nothing that I am aware of before and during the market hours, but in the aftermarket hours in the evening, India's bi-weekly banks deposit and credit growth. And in the night, various US jobs related data such as unemployment rate, payroll data, etc. Coming to technical, yesterday Nifty opened higher and the opening price was the highest point of the day, and it declines throughout the day, making it a large red candle with a small upper shadow. And this happened in the uptrend, thus this formation is called bearish belt hold formation. It's kind of indicating the possible trend reversal from bullish to bearish, but requires further confirmation in the upcoming session. However, the daily momentum indicator has a positive crossover, thus this dip could be a buying opportunity. And the pattern of higher tops and higher bottoms that formed since the March 2023 lows was not yet disturbed. This indicates that the intermediate uptrend is still intact. I expect the Nifty to find support around the previous swing high of 18,450 before again resuming the uptrend. Of course, if this support fails to hold, then a further correction is likely. I mean, for the moment, the overall sentiment slightly negative, but it might change as soon as Nifty moves above 18,500 level. Then, in case of Bank Nifty, it too forms the similar candle. I mean, it opened higher but could not able to sustain those levels for long. As yesterday, again throughout the day, it was remained under pressure after the initial hour of trade and hit a day's low of near 43,700. Thus, it forms the long bearish candlestick pattern on the daily chart, making lower highs and lower lows formation. However, yesterday, India VIX cooled down further to below 12 levels, so I'm guessing significant selling pressure is unlikely in the near term. Generally, low level of volatility indicates a high level of confidence in the market. Then from pivot chart for Nifty, at present the support is present at around 18,470 and strong support is at 18,400. On the higher side, the resistance to break is at 18,620. Then in terms of Bank Nifty, the support is present at around 43,600 whereas the resistance is at 44,185. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.